Welcome. We are following this book. Chapter 10, Plant Assets, Natural Resources and Intangible Assets. Learning objectives. Explain the accounting for plant asset expenditures. Learning objective 2, apply depreciation methods to plant assets. Learning objective 3, explain how to account for the disposal of plant assets. Learning objective 4, describe how to account for natural resources and intangible assets. Learning objective 5, discuss how plant assets, natural resources and intangible assets are reported and analyzed. So today discussions on learning objectives 1, explain the accounting for plant asset expenditures. Plant assets are resources that have just our first discussing point. What is plant asset? Basically, plant assets are resources that have we have 4 characters here. Physical substance, a definite size and shape. Every plant should have physical substance. Number 2 are used in the operations of a business. That means plant asset used in the operations of a business. To operate the business, just we need plant assets. Number 3, plant assets are not intended for sale to customers. That means we do not sell these plant assets to customers because of last one are expected to be used to the company for a number of years, because we will use these plant assets for number of years for proper operation of the business. Okay, so referred to as property, plant, equipment, plant and equipment, fixed assets. This is the examples of plant assets. We could move the slides. Plant assets. Plant assets are critical to a company's success. Suppose this is the name of the companies. Here we have 6 companies. Plant assets as a percentage of total assets. Plant assets are as a percentage of total assets. That means a company use, suppose here Microsoft company, they use 3%. Plant assets, they use 3% of total assets. This is the Caterpillar company, they use 18%. Nordstrom company, they use 39%. Walmart stores, they use 53%. Wendy's company, they use 73%. And Southwest Airlines, they use 77% of plant assets of their total assets. Okay, I think everybody is clear. Now, determining the cost of plant assets. How could we determine this? So here, historical cost principles. We use historical cost principle to determine the plant assets. So here, historical cost principle requires that companies record plant assets as cost. Cost consists of all expenditures necessary to acquire an assets and make it ready for its intended use. We have some points here. Important matter. Cost. Suppose companies record plant assets as cost. Suppose we purchase a piece of land. So this land dollar 10,000. We have purchased this land for 10,000 amount. So here we call this is the historical cost. Or equipment, we have purchased an equipment dollar 1000. So this 1000 we call this is the historical cost. Suppose we are using this equipment for 5 years or 10 years, etc. So after 5 years, if anybody asks the company how much amount needed to purchase this equipment, that times we tell the $1,000 for this equipment. Now another point, cost consists. This cost, suppose this 1000 amount consists of all expenditures necessary to acquire an asset. All related expenditure. Next slide, we will make clear this matter. Cost consists. Now suppose this land, determining the cost of plant asset. First on land, all necessary costs incurred in making the land ready for its intended use. Increase debit the land account. Suppose when we purchase a piece of land, at that time the land will be debit. Our cost typically include. Suppose here cost consists of all expenditures. This point we explain here. Cash purchase price. Cash purchase price of land. This land. Number one. Number second, closing cost such as title and attorney's fees. This is include the land price. Number three, real estate broker's commission. Number four, accrued property tax and other liens on the land assumed by the purchaser. So this point is related to land purchase. When we calculate the land price, that times we consider these four types of expenditures. That means cost typically include these four items. Move to next slide. Now determining the cost of plant assets, we have an illustrations. Hayes company acquires real estate at a cash cost $1 lakh or 100,000 amount of dollar. The property contains an old warehouse that is raised, that means removed, at a net cost $6,000. $7,500 in cost less 1,500 proceeds from salvaged materials. Okay. So this $6,000 is main. Additional expenditures are the attorney's fees $1,000 and the real estate broker's commission $8,000 required. It mean the amount to be reported as the cost of the land. Let's look this matter. Determine amount to be reported as the cost of the land. First on cash price of property $1 lakh. This is $1 lakh. Net removal cost or raise cost of warehouse $6,000. Attorney's fees $1,000. Real estate broker's commission $8,000. The cost of land $1,15,000. This is the cost of land. So such way we could calculate the cost price of land. Okay, so this example, cash cost of 1 lakh, the real estate at a cash cost of 1 lakh, property contains an old warehouse that raised 6,000, and then this is attorney's fees and broker's commission. So these four types of costs we have considered here. Move to next slides. Land improvements. This is also plant assets. Structural additions made to land. That means cost includes all expenditures necessary to make the improvements ready for their intended use. If we could use the land properly, that times we need to improve our land. So how could we improve this? Examples. Driveways, we need to be set up for constructions. Driveway. Suppose this is land, we need driveways. This is the ways to move on the land. There are parking lots, fences. That means this is our land. We need to fences. That means boundary wall, landscaping, and underground sprinklers. So and limited useful lives. That means it has limited useful lives and expense or depreciation the cost of land improvements over their useful lives. Okay. So this is the related land improvements. This cost. We move to next slides. Buildings. Building also the plant assets. Here buildings includes all costs related directly to purchase or constructions. The purchase cost, purchase price, closing cost, that means attorney's fees, title and insurance, etc. And real estate brokers commission, remodeling, replacing or repairing the roofs, floors, electrical wiring and plumbing. Construction cost, construction price plus payments for architecture fees, building permits and excavation costs. This is also related to building cost. When we purchase, at times we need to be added these types of cost, and when we constructions, this we need to be added these types of cost, and then we could get actually building cost or construction cost. Then equipment also plant assets. Equipment also plant assets includes all cost incurred in acquiring the equipments and uh, preparing for it for use. The cost typically include cash purchase price, sales tax, trade charges, insurance during transit paid by the purchaser, expenditure required in assembling, installing and testing the unit. So these five types of cost related to equipment. When we purchase equipment, this is the purchase price, and then this is these are including with this cash purchase price. So it's example. This is a illustration. This illustration shows the matter. Illustrations. uh, Leonard company purchases a delivery truck at a cash price of $22,000. Related expenditures are sales tax $1,320, painting and lettering 500, motor vehicle license 80, and 3-year accidental insurance policy 1,600. Compute the cost of the delivery truck. So here cash price this one, sales tax this one, painting and lettering this one, and motor vehicle license and 3 years accidental insurance. This is the operating cost, so we couldn't consider this cost. Okay, so total cost of delivery truck 23,820. Okay, I think everybody is clear. Next, prepare the journal entry. The journal entry, the equipment debit, license expense, prepaid insurance, and the cash. Okay, so this is the journal entry of this example. Okay, Ex- expenditure during useful life. Ordinary repairs are expenditures to maintain the operating efficiency and productive life of the unit. You know, if we want to maintain the uh, ordinary repairs are expenditures to maintain. If we want to maintain, we need to operating efficiency and productive life of the unit. Debit to maintenance and repair expense are refers to as revenues expenditure. Okay. Additional and improvements are cost incurred to increase the operating efficiency, productive capacity, or useful life of a plant asset. Okay. Debit the plant asset affected refers to as capital expenditure. This is the this is related to revenue expenditures. And this is related to capital expenditure. Additional and improvement are ordinary repairs. Ordinary repairs related to revenue expenditures. And additional and improvements related to capital expenditure. I think everybody is clear. Cost of plant asset. Assume that Durmond Heating and Cooling Company purchases a delivery truck for $15,000 cash, okay, plus sales tax $900 and delivery cost of $500. The buyer also pays $200 for painting and lettering, $600 for an annual insurance policy, and $80 for a motor vehicle license. Explain how each of these costs would be accounted for. The solution: the first four payments, this, and this one, are includes the cost of truck. That means total cost will be 60,600. Okay, that means this 15,000. This is a delivery cost. That means purchase cost plus sales 900. This is the sales tax related to this heating and cooling, and then 500. This is the delivery cost, and 200 buyer also pay 200 painting and lettering, and then the payments of insurance and license are operating cost and therefore are expensed. Okay, thank you so much. uh, the end.